Alright traders, I am back again with another video, and in this video we're going to take a chance to look at, we're going to take the opportunity to look at the New Zealand dollar Swiss franc. Have a trading setup here, one of the most basic, well, not one of the most basic Ichimoku setups. It's one that I use a lot, and that thing that I'm looking at here is we are going to look at, you had a Kumo breakout here. So this is the New Zealand dollar Swiss franc on the daily time frame. You can see the market was moving to the downside here. And then we started to move to the upside. If I look at divergence here, you could see where the market was flat here, or pretty much still going to the downside, but you had the indicator, which is the ultimate oscillator, moving to the upside here, and then finally the market kicked in with it. So I believe we're following the indicator here. But now what I'm looking at here is you basically have price that violated the Kumo here. So you have all bullish signals for Ichimoku, because you have first a Kumo twist, which is a weak signal because it's in the bearish territory, but we don't care about that right now. And then the next thing that you have is the Kumo twist. Your future is bright. All right. And then you have Chico span above price. That's a really good thing. And it's above Tenkan-sen and Kijin-sen. So there's a couple opportunities to catch a trade here. All right. So being that it's Thursday and close to the end of the week, Friday, tomorrow, the last trading day, and then you have the holiday weekend, and then Monday's New Year's. This may take a change, but it may happen over that time. But it may happen Tuesday. All right. If you're looking at the daily time frame, I don't believe this will be ready. You got to see what this next candle yields right here. So whatever this candle yields us is going to give us our defining what the opportunity is here. If this candle yields as indecision or rejection, or if this candle yields a bullish engulfing, then we're going by price action, and we're looking at the bounce on the cloud here. So that's one of the main things that we're looking at, is the bounce on the cloud. You had a Kumo breakout right here, and I don't know, it looks like it was valid based off of everything, because you had a breakout here, but I wouldn't have taken that breakout here, because we're looking at price and looking at price pulling back, because you look at how the market moves here, and we're getting a little bit of distance on Kijin-sen. When you have a flat Kijin-sen here and then market's flat, you could see the rejection, the rejection to the upside, and then see how the market dropped back to the downside. What's bad here, we have support here from the flat Kumo here, which is really good, and then we have a flat Tenkan-sen, which is not good. You don't want to see a flat Tenkan-sen, because then you don't have any momentum in the market, which means this is your short-term momentum, which means the short-term momentum to the upside is gone. You have everything flat now, so that's a big sign right there, and this is flat also. So we could see some ranging here. One thing that I would look at is go down to the 4-hour time frame to look for another opportunity. All right. So we're going to mark this cloud, because we don't know what this level is. So we want to mark this cloud level. So let's mark that cloud level. And then when we go to the 4-hour time, we'll be able to look at that cloud level and use that as our support level. So now what we're looking at is the bounce on the daily. So don't get confused when I leave Ichimoku on here, because I'm going to show you what we're looking at first of all. So first of all, we're looking at the market moving in waves, and I'm going to take I'll take the bigger waves. We're looking at the market going here, 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 then pulling back again, then going up and pulling back, and then continuing this move. And following will be your Tenkan-sen level along with your Kijin-sen level. So you want to see that angulation, and then your cloud will start to follow, because it's much later, and then so forth. Currently we don't see that. We see a little bit of flatness here, but we do see what price is attempting to do. Now we're flat here, so that is an issue for us at this moment, being that this is the daily time frame, so it gives us a whole 24 hours. This candle just opened 10 minutes ago, so hopefully we'll go to the 4-hour time frame and see what we look. So now when I go to the 4-hour time frame, let me go back to the daily, because you're going to get confused here. When I look at this 4-hour at the daily time frame, my bias is the trade to the upside. My bias is based on the daily time frame. I have a crossover that's bullish. I'm bullish here. So what I'm looking at is a bounce on the cloud on the daily. So if I go to the 4-hour time frame, am I still going to be looking for a bounce on the cloud? Probably not. I'm looking for now the price at that level. So I want to pay attention to the 4-hour price action, not the 4-hour Ichimoku per se. So I really could take Ichimoku off the chart so you don't get confused. But when I go to the 4-hour time frame now and I leave it on the chart, you will now get confused, because you're going to say, Well, it's bearish. You got a TK crossover that's bearish and prices moving to the downside, but it's still above the cloud, right? That's one thing. So we're still bullish. Chico span is really much inside price, but still a little bit above price. So with a move here, so what we're looking at here is this is our daily cloud. So the 4-hour signal is giving us an opportunity, maybe. So you want to wait for that 4-hour candle to close. It just opened 11 minutes ago now. So you want to wait till it's 5 o'clock. At 9 o'clock, we'll see what this candle is doing. But at 9 o'clock, you may have a 3 inside up where you take the trade based off of a close above this level. So that's what we're basically looking for on the 4-hour time frame, is a close above this level. All right. And now we're looking, because we're looking, our bias is based on the daily, and we're looking for the market to continue to the upside. Now, if we close much below Tinkinson level, then we know we're done. So with the 4-hour, you want to have your stop loss is going to be a little bit below this level. But when I go to the daily, that's what I want to use. So really, Ichimoku yields you with a stop loss way down here. That's your automatic stop loss with Kijinsen. I'm not going to go that far. I don't need to go that far to realize I'm going to lose this trade. So basically, even when you look at fractal levels, the next level is way down here. So our only support level is the cloud and the Tinkinson right now. So we look for those to hold us from dropping any lower. But again, we're flat here. So I want to be a little bit below this level with a stop loss. So if you're going to put a stop loss, just put it a little bit below Tinkinson. So you want to give it a little room, give the market a little room. And if it takes you out, don't go back in this trade. Wait and see what price is going to do. See if price is going to drop down to your Kijinsen level. And then at that point, if price comes back inside the cloud, you could wait for the Kumo breakout at that point, because you'll have all signs bullish for you. Now, another thing that you could look for, if price moves inside, takes you out if you get into the trade, and comes back inside the cloud, you could wait for the daily Kumo breakout again, because you'll get another breakout if price comes inside the cloud. But also we wait for this opportunity with Chico span. This is a Chico span breakout where Chico span closes above the cloud. So I'll show you what I'm talking about. So Chico span is now below the cloud, but it's bullish because it's above price. All right, it's above the 26 period price realm, but it's also above Tenkan-sen and Kijin-sen, which is very good because we have nothing hindering us except the cloud. We need to get through that cloud. Once we get through that cloud, then we're safe. But I think you're going to find a little bit of issues getting through the cloud. So you may see some ranging here. But once Chico span breaks above the cloud and closes, the candle closes, and Chico span closed above the cloud, that's your Chico span breakout. And you want to take that trade to the upside. So that's a breakout with Chico span. And you take that trade where Chico span closes above, because a lot of times what you're going to see is Chico span is going to come up to the cloud and its price for honoring this level, then boom, and then and then finally break and go to the upside, which means you sit around in here for a little while. So basically on the daily time frame, you could slow this thing down right here. I don't want to look at this long wick and say I'm gonna wait for a close above this. A lot of times you'll see candles trading inside of candle bodies. Now wicks may go higher, but if I close outside of this candle body on the daily time frame, that's where I can enter, and I put my stop loss a little lower. Now naturally, again, Ichimoku yields you this level. That's where you're supposed to put your stop loss. You don't need to have that much of a risk right here to take this trade. Even if you use the fractal level, you still are pretty far from the Kijinsen. All right, so we're just going to go by the bodies right here. So let me go back to the 4-hour time frame. So remember, we already set this whole thing up based off of the daily. Now again, we could still get some pullback down to Kijinsen, and then at that point, if we get inside here, we'll change our bias and wait to see where we are, look for a bounce or maybe a break below above the cloud. But at this point, it looks like this is trying to hold here, so we're going to yield that as our support level. And you got a flat Tinkinson, you got a flat Kijinsen, you got a flat cloud. Let's see if those levels can hold support. So what we look for is we have our level, now our signal, and then trigger. All right, so I'm going to the 4-hour time frame really quickly. So again, 4-hour time frame, we're trading inside this body. So we want to see a close above this body at 3 inside up. All right. And 3 inside up, it could take 3 or 4 candles to break outside of this body. So watch what you're doing here. Watch to see if you close above this level. So I got let's say this whole box here is going to be your entry and stop loss. So your entry is a close above, and your stop loss is a little below that level, and then you'll see if the market can continue to move to the upside. Now there's some levels on here that traders don't even look at, so, and don't even understand how to trade them or use them, but the fractal levels are very important. So I can understand which way the market's going once it moves to the fractal level, or violates a fractal level, or it uses that fractal level for support and resistance or whatever. So that's what I look for. So even if we get through this level, we still have other levels that are hindering us, and we still would need to look at those levels. But I based everything on the daily time frame basically. So that's what we would be looking at. Now this market has shown me right now that it's weak, right? Because you got a flat Tinkinson. Should never have a flat short-term momentum indicator, right? Your momentum should never be flat, your short-term, because look at it here. It was not super flat, but it was kind of flat. And you can see what the market was doing. Pretty much nothing right here. And then the market took off to the upside. All right. So we want to be careful of that. I think let's look at our targets. Now I use Ichimoku observation theory, which is Ichimoku has three theories that most traders don't learn about. All right. So one of the most important aspects of Ichimoku is time analysis. All right. And then observation theory and wave theory. So we have wave theory. I'm not going to get into that too much. We have time value. I'm not going to get into that either. But we do have our observation level, and see, I base my observation level off of Fibonacci expansions, because I've already put the numbers in for me to know where the levels are. So Ichimoku moves in waves, just much like Elliott waves. So when you see the market moving in these waves, and you could see it up, down, up, down, up. So you have a I leg, which is the I wave, and then a V wave, and then an N wave. The market continually moves in N waves. So you'll get an I wave, and then a V wave, then an N wave total. All right, so let me draw it out for you so you can understand what I'm talking about. These are the things that you look at in the market. I'm drawing a big leg. I wave, V wave, now N wave, V wave, and then N wave. That's what the market we should see happen. All right. Now what I look for is, a lot of people call these things head and shoulders, but I just look at this as three mountains. And when you see these three mountains, if the market cannot violate this level, then prepare for the fall. All right. And that's how you see as the mountain rolling over, and then the market moves to the downside. All right, so three mountains will let you know that, yep, that's not going to make it to the upside most of the time. Sometime I can't give you anything that's 100% guaranteed. I could just give you things that may help you to notice stuff. All right, so one thing I want to go back and look at is divergence on here. So let's see what we have in this case. And we don't have any divergence. All right, so we're good. So now we're going to go back to the 4-hour time frame real quick. And so that's our trade setup. Just told you everything. Looking at our level that we're going to trade. Oh, we didn't shoot for our target. Sorry. Get off track here, you know what I'm saying? But anyway, I'm going to look at two different targets, all right? And I'm going to show you how I set these up. This is set up with the Fibonacci expansion tool. Now, one number that you guys already have in here, and let me show you why I'm looking at this. So the market from the first low would be 1, and then up to this point would be 2, and then you would have 3 here, and then 4 would be wherever the markets or level would be. I'm going to show you that 1, 2, 3, 4 level, but I'm also going to break it down to the smaller one, which is this 1, 2, and this isn't a confirmed 3 yet, but if we get a fractal there and the market stays there, that's 3. And we could plan ahead, because if we take our trade, let's say we enter the trade right here. Let's just say that, all right, based off of the 4-hour time frame. We're going to say that's where we entered the chart. Well, I messed up. Let me put it back. Let's just say we enter it there, period. This becomes 3. So we have a 1, a 2, and then we have 3. So if that's 3, I need to find where 4 is. That's where my market's going to pretty much go, because you have 1, 2, 3, 4. And I'm going to take it backwards and show you. So let's go with this tool. So that's 1, 2, 3. and then 4 would be right here. So Fibonacci expansion tool always gives you this one level, which is 1.0, which would be 0.70812 in the market. But it doesn't give you these other levels, which are Ichimoku observation levels, which would be my E, V, N, and NT level. I always take a trade, and when I get these 1, 2, 3 trades are bouncing, because most of my trades are pullback trades. So when I get a pullback trade, because I'm always looking to trade off of the bounce of Kijinsen, right? I'm Tinkinson right here, or Kijinsen, or the cloud. And when you're looking for those, they're usually pullback trades. It's not a breakthrough trade, it's a pullback trade. So a lot of times I'm looking for when the market's up here already, I'm already planning for it to come back to this level, and then this is where I look to get into the market. All right, so you had a bullish engulfing here. If you got into the market on the daily time frame, then you would set this up, and I'll show you how you would set it up. But looking at this, we're looking at the small level. So 1, 2, 3, and then 4 would be this level right here. So I'm going to put that there. This is 4 right around there. All right, so 708.12, but I got it at 708.16. So that's going to be our target level when we get into this trade anywhere in here, if this remains 3. Now if the market makes a new low here and goes lower, then this will not be 3, and we'll have to recalculate. So that would be our level. But now this is, keep in mind, this is our level, our target, but we also could go at the big term target, because remember I said this was 1, 2, 3, and we're looking for 4 up here somewhere. So if this is 1, we're going to put it at 1. This is 2, we're going to put it at 2. This is 3, we're going to put it at 3. And so based on the long-term target, we would look for this 1-to-1 ratio right here. You see whatever it is, 0.71016. So this would be our other target. But anywhere in here, you're looking to shoot for this level. Now it doesn't mean we're going to get there. Maybe we don't even get to this level. But when you're always taking these trades, you have to make sure you get past this point here. So this is your 1. I'm going to draw it out again. And what traders usually do, 1, 2, 3. What a lot of traders usually do is look for the 2 level and then trade a break above that level, and then trade to where the 4 is supposed to be. I never do that because, first of all, this is the fluctuation level. And then the second thing is I'm trying to get the trade at the best area I can where there's support. All right. There isn't really any support here. There could be resistance here because we need to violate this fluctuation level. All right. And if you can't violate that fluctuation, so with Ichimoku, this is just fluctuation level. And if you can't violate that level, then we see the market ranging in this area. We see the market doing this and then maybe forming a P wave or a Y wave and then moving to the upside or downside. All right. But basically, I don't want to trade at that point. That's where I'm probably looking to see if I could get through that point if I already have profit, and I want to see if I could violate that level, because if I can violate that level, then I'm shooting for this level up here. I'm going to shoot for that target. All right. So you don't want to trade at this point. You want to find the 3 level, and it's based off of levels. Again, levels of support, which is the Kijinsen, the Tinkinsen, the cloud, maybe a horizontal support and resistance level that you're trading. So when the market moves up and comes back down, when it's up here, we're already looking for our level. Where's our level that we're going to trade? So based off of Ichimoku and other aspects, if that was the level, we wait for the market to get back to that level, and then we trade to the upside. So with that said, that's what we're looking for here. All right. So that's how my trading is, and that's what I always look for and do pretty much. Not a lot of the breakout trades like Kumo breakout and stuff like that, but those are there. So guys, this is good for any type of trading. Basically, you could trade stocks, anything. I've traded more than just Forex with this. So again, trading cryptocurrencies. You could trade stocks. So yes, this works for a lot of things, but this is the trade setup that I'm looking at right now, and this was just a basic Ichimoku trade setup, one of the easier trade setups. And remember the things that I showed you. We also saw the bounce levels, and it's pretty much pullback trading, and then we saw the Chico span breakout trade also. So that was a breakout opportunity. All right, and then again, if the market comes inside the cloud again, closes inside the cloud and then closes back outside, will give you a Kumo breakout opportunity. But based off of my trading setup, I don't want that to happen. Now with the holidays coming up, as far as the new year coming up in a couple of days here, this may blow my trade in the water because we're going to lose the volume and everything. But right after that, the volume is going to pick up. So we may see this drop a little lower, but then that volume, once that volume picks up, we'll see the market probably move to the upside or start to get these trends that you're going to start seeing for the increased volume, and you won't see as much volatility. You see the market moving more. All right. So again, this is probably going to be one of my last videos of the new year. So hopefully I've been helping you guys out. And again, you could come visit me at FX at One Glance. And the new year is coming, so I'm hoping that you all have a happy holiday, happy new year, and may God bless you throughout the new year. All right. Until next time, traders, have a great one. God bless. So long.